Thanks for joining us. I'm Marlon Bowling, your tour guide to the ag commodities, and we are going to be taking a look at what's driving our grain trade in this particular segment. And before the markets opened up this morning, USDA kind of threw a curve in there, and they had a couple overnight export sales to announce. However, they were not both on the positive side. So I'll explain. Here we have soybeans showing an export sale of 268,748 metric tons. It was for delivery to unknown destinations, as they put it, and it was for the current marketing year. All right, chalk went up on the plus side. Then they had a net cancellation that they also reported, and it was a sale that had been made to China. They canceled 180,000 tons of soybeans for the current marketing year, chalked that up on the negative side. All in all, it was a net gain, though, of about, getting close to 90,000 tons. Now, let's see how the trade is doing. And we have had a rather positive start to the trading day in the grains. We'll start with the corn here, and then we'll walk through the soybeans and the wheat, too. Now, in the corn, we have March trading 4 1/4 higher at 372 3/4, a penny off of our high of the day. On the soybean trade, you know, they traded about a nickel higher overnight, and then they opened 15 higher. Well, now we're trading January 18 higher at 893 1/2, and March is up 17 1/2 cents. On the wheat market, we have Chicago December down a penny and a half, but that one goes into delivery mode here Friday. Most action is rolled out into March now, and that is up a penny at 507 1/2. Meanwhile, Kansas City has the March wheat now trading 5 1/4 higher at 488 3/4. Scott Gecas joins us from the trading floor in Chicago, and he, of course, is with Longleaf Trading. Scott, this is an interesting open to the day here on the grain side. A little bit firmer tone than I think most analysts were expecting to see, given the fundamentals underlying the trade. What's going on?
Completely at opposites. So with the soybean market being as much as it is up today, it's due to short covering yesterday, short covering obviously today, with the hopes that something's going to come out of positive with the G20. Now, with that being said, with the world ending stocks being at the levels they are at record highs, that's definitely coming into play. Now, the thing with the G20, even if something does happen with China, China already made a point to say that they're going to stay away from U.S. beans. With the Brazilian planting progress being the best on record, it's very evident that they're going to continue to buy Brazilian beans versus U.S. soybeans. So even if that China deal does come through, I don't think it's going to materialize that much for U.S. beans. So we're going to see how that really plays out in the short term. But either way, we have to wait until that news comes out, over the weekend.
And the wheat market is an every other day performer this week. It goes up one day, down the next, and now we're back up again. What's driving the wheat trade?
Yeah, for the last few days, the wheat trade's been going strictly based on the Russian-Ukraine tensions going back and forth. There's about 30 vessels that are waiting to get through that Ukrainian port. So we're going to wait and see how that plays out. If they cannot get through that, we expect wheat prices to spike a little bit just based on supply and demand. So if they can't get those wheat prices, or if they can't get those wheat vessels through, that's one of the reasons why U.S. wheat is becoming more and more attractive.
Okay, we'll continue our conversation in just a moment. We're visiting with Scott Gecas of Longleaf Trading in Chicago. We'll come back and talk about our livestock trade in the outside markets right after this. Look at a few of our soft markets for you. Let's go ahead and pull up our orange juice futures and see what's going on in that neighborhood. Remember, we had a bit of a rally yesterday, and if you recall, Tim Ross was talking about the cold temperatures all the way down to the Florida Panhandle the night before last, and it was expected to get into northern Florida yesterday or early this morning. Well, we do have the January OJ futures now $1 higher at 140.30, and we can check out as well our coffee and sugar market for you this morning. We have the December futures on coffee down $1.20, and we have March down 85 cents. Meanwhile, if you look at the sugar trade, on the sugar prices, we have the March now 42 points higher. We're at $12.76 a pound. We have the May contract up 40 points. So sugar having a fairly bullish day, at least a start to the day today. Let's go back to our conversation with Scott Gecas of Longleaf Trading in Chicago and talk about our livestock trade, where we have a bullish spin on the grain trade. Let's take a look at our live cattle futures, Scott, and see which way they want to go here. They haven't made too much of a move, but they are starting to firm up a little bit. We have December live cattle now up 33 at 117.03, February 38 higher at 120.97. And on the feeder cattle, We have the January contract now just 7 higher at 148.50. March up 7 as well at 146.07. And if you look at the lean hog trade, right now you have your December contract up 40 at 58.27 and February 35 higher at 65.40 after a lower start this morning. So they started out weaker and followed through selling and had an about face about 20 or 30 minutes into the trading session here. Scott, the cattle market just kind of drifting around today, as we talked earlier today, but the hog market maybe has found a temporary bottom. What's driving it?
Yeah, I mean, with the hog market, everything is all due to the African swine fever. If the exports show up, that market's going to explode to the upside. If they don't show up, we're going to waffle out around back and forth. The African swine fever is clearly not contained. There was a report of hand, foot, and mouth disease at one of the farms in China as well. So there's a lot of underlying factors. I think if the trade war deal comes out with the G20, I think that it's going to have the biggest effect on the pork market. Now, with the cattle market it has a very supportive tone just going into the holiday season. Holiday demand is much stronger than expected, consumer as well as the restaurants. You also have consumer confidence at 18-year highs. It's definitely putting a bullish factor into the cattle market as well.
All right. Well, thank you, Scott, for chatting with us. I appreciate it, sir. Scott Gecas of Longleaf Trading. He's located at the edge of the trading floor there in Chicago right now. Quick look at our dollar value.